guys, welcome back to the channel. Today I'm going to be covering a long-term Bitcoin indicator that provides insight on where the potential bottom for Bitcoin could be. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So this is the indicator down here. It's color-coded for you to describe the change in the 200-week moving average. So I'm going to be showing this in a little bit, but first I want to talk about the 200-week moving average and just kind of describing what it is and why I'm using it. So the 200-week moving average is going to be taking the closing price of the last 200 weeks, averaging it together, and it's going to plot it, and that's what this purple line here represents. And I'm using it because in the bear markets, this has been ultimately where we have provided as support and found a bottom. So you can see in the 2015 bear market, it held support once, twice, three times, and then ultimately we kicked off the incredible bull run. And then in the next bear market, this is where we found support in December 2018 and early 2019. And then again in 2020, when we capitulated in the March 2020 crash, that is where we kind of held the line on a closing basis. So obviously, historically, it has provided as a great insight on where Bitcoin could ultimately bottom. And I'm going to be showing you this indicator right here, which is going to be plotting the change in the 200-week moving average. So when the rate of change and the slope of this 200-week moving average is at its highest, that is when you're going to see the yellow, the orange, and the red colors. And on the other side, when you see the rate of change at its lowest, when it's not moving up very quickly, that's when we're in these deeper blue colors. So it's a great indicator because it shows you the long-term trends, right? This is a 200-week moving average. So it's going to be taking the closing price of 200 weeks ago. So if we look back 200 weeks on Bitcoin, we were closing prices at around $6,000. So given that we're closing the weekly chart roughly, between $28,000 and $30,000, we're going to be replacing a $6,000 candle close with a $28,000 to $30,000 candle close. So that means the moving average is going to be moving up by about $30,000 minus 6,000 divided by 200. So that's $24,000 difference divided by 200. It's going to be moving up very slowly right now, right? Because the closing price today is not significantly higher than 200 weeks ago. Yes, it does seem like a lot, but if you consider that historically it has been much higher, you would note that it really isn't that much of a big difference. So if we go here in the 2017 peak and we go back 200 weeks, you can see how we were replacing closes in the $600 range with closes in the $18,000 range. So that's ultimately what led this moving average to increase so rapidly. And that's what led this indicator to plot all these closes in red here. So that was a great sell indicator because it was showing us that it was moving up way too quick. So I'm going to switch this over to a daily chart just to kind of show the colors a bit more and kind of give you a little bit of a better picture of what I'm saying. So as you can see, when it started really kind of being the steep, massive vertical move, that's when it really got into these red colors. And then in the bear markets, you can see how they're all blue, right? And the further we are into the bear market, the darker the blue it gets. So you can see how it was a little bit lighter blue down here, and then later on it was very dark blue sort of at the bottom here. And then again in March 2020, ultimately this bottom here was the darkest blue that we got. And you can see that we are once again in the blue color range after not being in it for basically a couple years, right? The last time we were at this color was roughly here in April of 2020, and you can see how just based on the price action, April 2020 was obviously a very bearish time, and we're very bearish right now. We're down quite a bit. Some alts are down 80 to 90%, and you see a lot of depression in the markets, a lot of negativity surrounding cryptocurrency and the entire ecosystem. So this is generally when the bear market is in the later stages, right? You see a lot of people exiting the ecosystem because they've lost a lot of money, they have no confidence, they have no faith, and they're ultimately kind of just stating that, okay, it's over, I'm done, I'm not coming back to this entire asset class because it's just a lost cause. And that's when a lot of people lose confidence. But historically, that's been the best levels to buy at, right? You can see how in the 2019 timeframe, this was ultimately the best time to buy in this entire cycle. And then again in 2015, all at these darker blue colors, right? So if we could make a move back down to $20,000, we are obviously going to be revisiting that darker blue color range. And I think that would be very significant. That would present an incredible buying opportunity long term, not only because it would represent us revisiting the darker blue colors, but also because it would have support from the prior cycle high, right? This 2017 mania peak high would provide support and ultimately a relief bounce if we were to go back down to that level. But also, as I talked about in my last video, that is roughly where the 200-week moving average is. So if we just look at this on a weekly chart, we can see how the 200-week moving average is at $21,841, and historically that is where we have been bouncing in the end of these bear markets. So if we get back down to this $20,000 to $22,000 range, I would consider that a tremendous and very significant long-term buy. I would be personally accumulating and DCAing in at this range, just given these indicators, because I'm trusting the historical trends. I'm trusting the indicators, right? The markets, they really don't care about your emotions, but these indicators, they don't lie. They've proven to be historically accurate, and this is just what I'm going to be sticking by, and I hope you are too, because letting your emotions get the best of you in the bear market is obviously not a winning strategy, as we've seen with several people capitulating their Bitcoin historically at these very significantly low areas. So if you enjoyed this video, guys, I really appreciate the feedback, the comments, all of it, guys. I read it all. And as always, I will see you in the next one.